Most Canadian seniors are going to receive extra money from the federal government this year, and many of them don't even know it's coming. In fact, some people could miss out entirely because of one simple avoidable mistake. I'm going to tell you what that mistake is before this video is over. So please, stick with me until the end, because this could genuinely affect your monthly income. Hello, and welcome. If you're a Canadian pensioner, whether you're receiving old age security, the Canada Pension Plan, the Guaranteed Income Supplement, or any combination of those, then what I'm about to share with you matters directly to your household finances in 2026. The federal government has introduced something called the Canada Groceries and Essentials Benefit. You may have heard it referred to as an upgrade to the old GST credit. And while that's technically true, there's a lot more to this than a simple name change. There are new payment amounts, new dates, and some very important rules about who qualifies and who doesn't. In this video, I'm going to walk you through everything in plain, simple language. No complicated tax talk, no government jargon, just clear, practical information so you know exactly what you're entitled to, when to expect it, and what you need to do or not do to make sure it arrives. And again, stay with me until the end because I'll be explaining the number one reason some seniors will miss this benefit entirely. It's something you can easily fix, but only if you know about it. Let me start from the beginning because a little background will help everything else make more sense. You've probably been receiving what's called the GST credit for years, those quarterly payments from the Canada Revenue Agency that help offset the sales tax that lower and middle income Canadians pay on everyday purchases. For most seniors, those payments aren't huge, but they're steady and they're reliable. Well, the federal government decided that in 2026, those payments needed to get bigger. Why? Because the cost of groceries and basic necessities has been climbing steadily for several years now. Food prices in Canada have gone up by nearly a third since 2020. Shelter costs have risen by a similar amount. And for people on fixed incomes, people like you, wages aren't going up to keep pace. Your income is essentially what it is. So earlier this year, Prime Minister Mark Carney introduced a package of affordability measures. The key piece of that package was a new law called Bill C-19. It received royal assent in February of 2026, and it officially transformed the GST credit into something bigger and more focused, the Canada Groceries and Essentials Benefit. You'll start seeing this new name on your bank statements and in any letters from the CRA. Now, here's something important and a little reassuring. This is not a completely new program that you have to apply for separately. If you were already receiving the GST credit, the transition happens automatically. The government is working through the same existing system, same infrastructure, same agency, same deposit into your bank account. They've just increased the amount and given it a new name to reflect what it's actually for, helping you pay for groceries and the basics of daily life. Does that make sense so far? Good. Now let's talk about the actual money. The Canada Groceries and Essentials Benefit is actually structured in two separate parts. Understanding both of them will help you know exactly what to look for on your bank statement this year. The first part is a one-time lump sum payment. Think of it as a transition bonus, a bridge between the old system and the new one. This payment is scheduled to go out on June 5th, 2026. If you have direct deposit set up with the CRA, the money should be in your account within a day or two of that date. If you receive checks by mail, it may take up to 10 business days to arrive. Now, how much is this one-time payment? For a single senior at the maximum eligibility level, it could be up to $267. For a senior couple, two people living together, it could be up to $349. Now, your exact amount may be a little different because the benefit is income tested, which I'll explain in a moment. But for most seniors on fixed pensions, this will be very close to the maximum. The second part is an ongoing increase to your quarterly payments. Starting in July of 2026, your regular quarterly benefit payments will go up by 25%, and that increase is locked in for 5 years through to June of 2031. Let me put that in perspective. If you were receiving, say, $160 every 3 months before, you'd now receive $200. Over the course of a year, that adds up to an extra $160 annually. For a senior couple, the annual increase could be even larger. And here's something that makes this particularly meaningful. The benefit stays indexed to inflation. That means it rises with the cost of living, so it doesn't quietly lose its value over time. So to recap the two parts, a one-time payment in June 2026, and then starting July 2026, higher quarterly payments every 3 months in July, October, and then January 2027. Now, I know the question that's most on your mind is, do I qualify? Let's go through that carefully. The good news is that for most Canadian seniors, the answer is yes. If you've been receiving the GST credit, you're already in the system, and the transition is largely automatic. But there are a few specific conditions to be aware of. First, to receive the one-time June payment, you need to have been entitled to a GST credit payment back in January of 2026. That January payment was based on your 2024 income tax return. So as long as you filed your 2024 taxes, you're in good shape for the June top-up. For the ongoing quarterly increases starting in July, the CRA will use your 2025 tax return to determine your eligibility. This is important, so please pay attention. You also need to be a resident of Canada for tax purposes, which, for the vast majority of you watching this, is simply where you live. You need to be at least 19 years old, which of course applies to everyone in our audience, and your income needs to fall within a certain range. Now, about that income range, most seniors living primarily on government pensions will comfortably qualify. For a single person, the benefit begins to phase out, meaning gradually reduce, once your net income exceeds roughly $42,000. It reaches zero at around $46,000 for the current payments, and the new expanded quarterly amount phases out at just over $56,000 for a single person. If you have a modest private pension or some investment income on top of your OAS and CPP, you may still qualify, just perhaps for a slightly reduced amount. One more thing about couples, the benefit is issued to one person per household. Typically the person whose tax return the CRA processes first. If your marital status has changed recently, for example, if you lost a spouse or separated from a partner, it's worth notifying the CRA so they can recalculate your household entitlement properly. Let me paint a quick picture to bring this to life. Imagine a woman named Helen. She's 71 years old and lives alone in a small town in Ontario. She receives her old age security and a modest CPP payment each month. Her income is well below $50,000 a year. She filed her taxes earlier this spring, just like she always does. Helen doesn't have to do anything special. On June 5th, she'll wake up and find that an extra $267 has been deposited directly into her bank account. Then, starting in July, her regular quarterly payments will be about 25% higher than before. For Helen, that's real money. It might be the difference between buying the brand she wants at the grocery store or settling for less. It might mean she doesn't have to worry quite so much when she fills up her car or pays her utility bill. That's exactly what this benefit is designed to do. Not to make anyone rich, but to give people like Helen a genuine buffer against the rising cost of just living day to day. Now I want to address something that I know worries many seniors, and it's a fair concern. Some of you receive the Guaranteed Income Supplement, the GIS, and you may be thinking, if I receive this extra money, will it reduce my GIS? That is a completely understandable worry because the GIS is very sensitive to income. Even a small boost in income can trigger a reduction in GIS payments, sometimes dollar for dollar. Here's the good news, and I want to say this clearly. The Canada Groceries and Essentials benefit will not reduce your GIS. Not by one penny. The government specifically designed this benefit as a tax-free, non-reportable credit. It does not count as income for any purpose related to GIS eligibility. So when the CRA is calculating how much GIS you receive, this benefit is completely invisible to that calculation. That means this is a genuine top-up, extra money in your pocket that does not take anything away from anywhere else. Your OAS is safe. Your GIS is safe. your CPP is unaffected. Now, the reverse is worth noting. Your CPP and private pension income do still count toward determining how much of the CGEB you receive. So the benefit is targeted at those with lower overall incomes, while making sure it doesn't accidentally claw back other supports you depend on. That's a thoughtful design, and for most seniors, it's very good news. I told you at the start that there's one mistake that could cause some seniors to miss this benefit entirely. Here it is, not filing your income tax return. I know. You might be thinking, I'm retired, I don't work anymore, my income is simple, why do I need to file taxes? And I understand that thinking completely, but here's the reality. The Canada Revenue Agency uses your filed tax return to determine whether you qualify for the benefit. It uses your 2024 return to determine your eligibility for the June 2026 top-up. It will use your 2025 return for the ongoing quarterly increases. If you haven't filed, the CRA doesn't have the information it needs to send you your money. Even if you have zero taxable income, even if you owe absolutely nothing, you still need to file. The act of filing tells the CRA, I'm here, I'm a resident, here's my household situation, here is my income. Without that signal, the system can't process your benefit. The good news is that filing taxes when your income is simple, just OAS and CPP, for example, is not complicated. Many community organizations offer free tax clinics specifically for seniors. The CRA also has free filing services available. You can ask your local library, your provincial government's senior services line, or even call the CRA directly at 1-800-959-8281. They have people who can point you in the right direction. If you have a family member who helps you with paperwork, this is a great thing to ask them to assist with. It doesn't take long, and the payoff, your benefit payments, is absolutely worth the effort. Let's go over the payment schedule so you know exactly when to look for this money. The one-time top-up payment goes out on June 5th, 2026. If you use direct deposit, expect it within 1 to 3 business days. If you receive a check in the mail, allow up to 10 business days. The first enhanced quarterly payment, that's the one with the 25% increase, goes out on July 3rd, 2026. After that, the next payment is October 5th, 2026, and then January 5th, 2027. Now, what if the money doesn't arrive? The CRA advises that you should wait at least 10 full business days after the scheduled date before calling to inquire. For the June 5th payment, that means waiting until about June 19th before you reach out. You can check the status of your payments in a few ways. If you have a computer or tablet, the CRA's My Account portal at canada.ca is a great resource. You can see your payment history, your benefit amounts, and your personal information all in one place. If you prefer the phone, the automated service at 1-800-959-8281 can confirm whether a payment has been issued. One more thing to know, there's something called the Client Authorization Required Indicator. If the CRA has flagged your account for identity verification, which sometimes happens as a fraud protection measure, your payments may be paused until you confirm your identity. If you call the CRA and they mention this flag, don't be alarmed. It simply means they need to verify who you are before updating your banking information or resuming payments. They'll walk you through the steps. The Canada Groceries and Essentials benefit doesn't exist in isolation. It's part of a broader effort by the federal government to help Canadians, and especially seniors, manage costs in 2026. For example, if you drive a vehicle or rely on transportation, you may have already noticed something at the gas pump. From April 20th through to September 7th, 2026, the federal fuel excise tax has been reduced to 0. That means gasoline prices should be about 10 cents a liter lower than they would otherwise be. For seniors in rural areas or those who rely on driving to reach medical appointments, grocery stores, or community programs, this provides some additional financial breathing room alongside the direct cash benefit. The government has also committed $150 million toward national food security programs and $20 million to support food banks. These aren't dollars that go directly into your account, but they're part of an effort to keep grocery prices from rising even faster than they already have. Taken together, the picture is one of a government that has heard the concerns of older Canadians and responded with both immediate cash relief and longer-term structural support. Whether or not you follow politics closely, the practical outcome for your household is real. Here's one more thing I want to leave you with because it speaks to something many seniors have told me they find challenging: the paperwork of staying enrolled in benefits. The federal government has announced a goal of moving towards something called automatic federal benefits by the 2028 tax year. The idea is that low-income Canadians, especially seniors, would automatically receive the benefits they qualify for, even if they haven't manually filed a return. The CRA would use information it already has to determine eligibility and issue payments without requiring you to do anything. Now, that's still a couple of years away, and for now, manual tax filing remains necessary. But it's a sign that the system is evolving in a direction that takes the burden off older Canadians who may find the filing process difficult. Think of it as a light at the end of the tunnel. In the meantime, the best thing you can do is file your taxes each year, or get someone to help you, and keep your information with the CRA up to date, especially your banking details and address. Let me bring everything together for you because I want to make sure you leave this video feeling clear and confident. The Canada Groceries and Essentials benefit is a real, meaningful increase in financial support for Canadian seniors in 2026 and beyond. It comes in two parts: a one-time payment in June 2026, and then higher quarterly payments starting in July 2026, locked in for 5 full years. Most seniors who have been receiving the GST credit will transition automatically. You do not need to apply separately. But you do need to have filed your income tax return for 2024 to receive the June top-up, and for 2025 to receive the ongoing quarterly increases. The benefit does not reduce your GIS, your OAS, or your CPP. It is a genuine addition to your household income. For most single seniors, the one-time payment could be up to $267. For couples, up to $349. And the quarterly increase starting in July is 25% above your previous benefit level. If you have any concerns about whether you qualify, whether your payment arrived, or how to make sure your CRA information is up to date, the easiest first step is to call 1-800-959-8281. The CRA has staff who specifically support seniors, and there is no shame in calling to ask questions. That's what they're there for. If you found this video useful, and I genuinely hope you did, I'd like to encourage you to share it with someone who might need to hear it. A friend, a neighbor, a sibling, a parent. There are seniors right now who don't know this money is coming to them, and a simple share could make a real difference in someone's life. If you'd like to stay informed about benefits, programs, and financial updates that matter to Canadian retirees, consider subscribing to this channel. We keep things simple, clear, and focused on what actually matters to your daily life. Thank you for spending this time with me today. Take good care of yourself, and I'll see you in the next video.